So Brett, one of these days we should get it rolling on my YouTube channel as well, because you can roll it in multiple places at once.
Looking for a lifeline in these tough times? Well, forget about stocks, real estate, cryptocurrency, or other.
You buy stock and the stock is at this price, and then 2 years later, the stock is triple the price and you want to sell it. Are you telling me that you have a way to defer the tax situation there? Let's talk about structures and ideas, and maybe you can shed some light on it for me too.
Yeah, and that's actually why we started our company, Capital Gains Tax Solutions, right? Because in the 2008 crash, a lot of my clients, when I was at Marcus and Millichap selling highly appreciated, multifamily properties in Northern California, they had felt trapped and pressured and had overpaid via the 1031 exchange. That's the only thing they knew, right? And they thought that was the only tool they could use to defer tax. And then everything stopped, and that was in the 05-06 market, and then 08 hit, and then some of them lost everything. Some of them lost half. And then we found out about a thing called a deferred sales trust, which goes back 25 years now, thousands of closes. It's been through the IRS, but it's proprietary and it's protected. And so we launched our company on basically that premise that there is a better way. It's an alternative way, and it can actually work for not only real estate, but it works for primary homes, it works for business sales, it works for stock, and it's had an amazing track record. But even the smartest folks either have heard about it or don't quite know about it because they think they know, but they don't.
Let's talk about public companies and stock. So, because you mentioned, you started off saying that the capital gains worked for real estate. How do you do that when you buy stock and the stock is at this price, and then 2 years later, the stock is triple the price and you want to sell it? Are you telling me that you have a way to defer the tax situation there? Is that what you're telling me?
Yes, absolutely. Yes. Okay, welcome everybody to the another Mastermind, Capital Gains Tax Solutions, DST Mastermind. We're talking all things cryptocurrency. We're talking all things the Deferred Sales Trust. I'm the founder of Capital Gains Tax Solutions, and my name is Brett Swartz, and I'm here with my co-host, Jake Muller, and also Capital Gains Tax up and rising star, Pierce York. Guys, how are we doing today?
Doing great. It's a fantastic day. How was your time in New York?
I'm still in New York, and it's still going great. We just got a chance to see an amazing play called Hamilton. If you haven't heard of that one, we were fortunate enough to get some tickets last minute and attended what might be the most amazing production or show that I've ever seen. And it was phenomenal. So thanks for asking. And also, no kids was the most important part. Kept the kids away. Just me and my wife, Melanie, hanging out, having some fun all week.
Right. Well, you say most important because, well, not everybody knows it's your anniversary.
Yeah. True.
So,
yeah.
So that's why it's most important. That's why it's most important. There's no kids. How many years?
12 years. Yeah. So 12 years. Hey, Rebecca, welcome. And we also celebrated her birthday as well. So we were able to kind of get two birds, one stone. It's like if you were born on Christmas Day, you always get the short end of the stick. In this scenario, I just try to double the love, right? With the anniversary and her birthday.
So let's talk about not exactly another anniversary, but how many years have you been? You're the veteran here, Brett. How many years have you been doing the Deferred Sales Trust?
Oh, so since 2009. So what's that? 2021 versus minus the 9. What about
so 12 years?
Yeah.
So that's a good time.
Yeah,
very good time.
Since you've been married, huh?
Yeah, essentially, right? Look at that. It's like I got married to I got engaged to the DST, and then we got married somewhere along the line.
We won't tell your wife that her anniversary is competing with the Deferred Sales Trust. We won't do that.
It's probably a good idea, right? Yeah, I don't want to give her the stats. So, well, thanks guys for asking about the trip. And Jake, how was your week?
It's been a very busy week. We have a lot of people doing year-end planning. Doing a lot of different strategies coming up here on the fourth quarter or in the fourth quarter, and what must they have done before the end of the year. And, we talk about a lot of different strategies: reinsurance companies, restricted property trusts, deferred sales trust. We do a lot of proactive planning this time of the year. And for a lot of people in the financial advisory industry, as well as tax planning industry, this is when they do most of their work. In the perfect world, it would be throughout the year.
Mhm.
But even all those conversations that you've had throughout the year, they come to an action item here before year end, because people commonly are well, they leave it until they're really sure. They leave it until they have most of the year's numbers. They leave it until, well, last minute sometimes, and then they have to pull the trigger, right? So it's a good time. It's a good time to be in business. It's a good time to help people out. There's always it seems always now, the legislative changes, the legislative tweets. It seems we have to do more research than ever before, not into necessarily the tax code itself, but into conversations that our legislators are having, which is a whole new dynamic.
Yeah, no, very well said. And I couldn't agree more, because it's the fourth quarter and people want to get stuff done before the holidays. They want to close their deals out. They want to close the book. It's especially, I think, busier today because of the pending and potential changes in the Biden administration with capital gains tax, the 1031 exchanges. And we'll touch on that here, by the way, because there's been some unique updates over the last week or so. But let me start us out by just kind of giving the overview of what we're going to be covering. We're going to probably go for about 35 minutes here. We're going to cover kind of the vision of why we're here. And then number 2, we're going to cover a deal close story of the week. And number 3, we're going to talk all about cryptocurrency and the way to use the deferred sales trust to kind of demystify the process. And so, and by the way, welcome Gary, and welcome Rebecca. Glad to see you here. And so the vision for this whole mastermind is to kind of demystify all things deferred sales trust and try to make it really simple, understandable, and digestible as you're selling highly appreciated public or private stock. Like you heard Kevin Harrington on the video. He was on my podcast several months ago. And then again, just a month ago, he'll also be a part of my chapter in my book. And in my book, we go into the fact that the most commonly misconception for highly appreciated asset owners, especially cryptocurrency, especially public and private stock, is like, oh my gosh, I can actually defer the capital gains tax without having to give it all the way to charity. I can also move it outside my taxable estate without having to buy a bunch of life insurance. And so the deferred sales trust works for public, private stock, works for cryptocurrency. And now they're not used as often, one, because cryptocurrency is kind of, it comes in these big waves, and folks are just learning about that. We officially closed our first cryptocurrency deal about 2 months ago. And we're in the process of closing about 3 to 4 others here in the next 30 to 60 days. But public and private stock goes way back. In fact, some of the Netflix original team members had highly appreciated stock after they IPO'd, and they used it for their public stock. But most people just don't know that, but it works. And so the vision of all of this is just to try to demystify, bring up any questions. No, there's no bad questions. We want you guys to bring your questions, put them in the chat. We want you to chime in and ask your questions. And then we'll cover the deal close story of the week. And then we'll cover, again, cryptocurrency, demystifying that. So that being said, let's start out with the deal close or anything else out of that vision, Jake. Any thoughts on that?
It's kind of an exciting time that we live in the fact that there's so many changes going on, that it's helped a few people shine. It's helped a few people. It's pushed a few people to make hard decisions. And that's not necessarily a bad thing. They just need to make sure that they and their advisors are getting the new advice or the outside advice that they need to make a better decision. And I say that not trying to toot my own horn or not trying to say anything out of context, other than we work really well with other advisors. A lot of times from start to finish, this is like a 4 to 5 to 6 meeting discussion with the client, with their advisors, financial advisor, wealth, tax advisor, estate planning attorney, contract attorney. A lot of times we bring in their real estate agents if it's a real estate deal. If it's a crypto deal, then sometimes we're bringing in more people. And it's a very exciting time where we do not look at other professionals as competitors. we look at everyone as collaborators. And I guess from a collaborative standpoint, that's the point I'm trying to get across. And what I would add to what you said, Brett, is the fact that we welcome scrutiny. We welcome other people to try and poke holes in this because it's got 25-year track record, 14 audits, no change, no findings. And it's been bulletproof and it's moving forward in a very positive way.
Beautiful. So let's lead to step 2, and which is or part 2 of our mastermind, which is the deal close story of the week. All right. So this is a repeat client. In fact, he came on actually to the mastermind about, I think, 2 or 3 months ago, kind of in the beginning. He shared his story. His name is David Sloan. You can watch his whole interview. He's a multifamily syndicator. He actually first sold his first property with his partner in Las Vegas for $20 million. It was a multifamily property. And he and his partner both rolled their general partner positions into the deferred sales trust. The biggest challenge for them on that first deal, or really any deal they have been selling over the last 10 years of doing this, was the fact that they weren't doing 1031 exchanges out of the syndication. So they were just buying, partnering, and then they would take the deal to full cycle, sell it, everyone pays their tax and go their separate ways, and everyone joins up again for the new one. So instead, they did it for their first one. They liked it so much, they did it for their second property, which was a $16 million deal in Phoenix, Arizona. And then they did it now, fast forward, that was over a year ago. So now fast forward, they just did it for their third property. And this is a property in Salt Lake City. So not too far from you, Jake, 67 units. And I asked him about the property. He said he bought it for $7.6 million. They did a full kind of renovation of the units. They did a new clubhouse, a new gym, just typical value add multifamily. They actually had one major investor who was representing some other LPs. And welcome Adam to the mastermind. And so they put a $3 million down payment, and then my clients put some money in, but they were able to sell the property it just closed yesterday for $15.2 million. So not bad, right? So $7.6 million and 15.2 is the sale price. And so you're looking at an substantial capital gains tax, right? And let's just kind of do the math here. So 15.2, 7.6. It's about a $7.6 million gain. You have some closing costs and such. So let's just take a couple $100,000 off of that. And you're looking at about a $7.4 million gain. I don't have the state of Utah in front of me, but Jake, I'm going to peg it at probably 3 to 5% for the state. Maybe you have
So
that
it's
number handy.
4.95, typically an effective rate closer to 3, but 4.95 is the state rate.
Okay, so that's 5. Then you have federal of 20, right?
Yep.
And then we add Obamacare of 3.8. And so my general rule of thumb is somewhere between 30 and 50% based upon the federal, state, Obamacare, and then it was called depreciation recapture, right? So that's how we get that 30 to 50% of that gain. So using 7.4 million, we're just going to use 30%. That's a $2.2 million tax liability, right? So this is where I say it's no longer just about cash flow, it's about tax flow, because that's a huge amount of tax to pay on a deal that they've owned, by the way, for about 3 years, right? And so instead of paying that tax, they can roll it into the deferred sales trust, defer it, and then the next best thing is they can put it into their next deal, all tax deferred. Now they got some stipulations there. We can't put all of the money from the trust into the next deal. We've got to have some diversification, some liquidity. But Jake, I'm going to pause there on those specs, and maybe even bring Pierce into the conversation. Actually, Pierce, I'm going to jump into you. Any questions on that deal? Do you see how we got to those numbers?
Yeah, no, that makes perfect sense to me. Sorry, I'm not that's not super helpful. I totally was tracking with you the whole time.
Because you're smart, right? You've been working with it for 5 years.
Well, I've been doing it. Yeah, I've been doing it for 5 years. I was like, oh yeah, it's $2 million tax.
So Rebecca, how about Rebecca? Now, Rebecca's been working with the deferred sales trust for about 4 or 5 months now. So Rebecca, did you track everything I was saying there? That makes sense?
It does make sense. I'll not talk too much. I'm in a very noisy place right now, but I got it. Yeah.
Cool. Awesome. I'll invite Gary into the conversation. Gary, did that make sense? Any questions on how I came to those numbers and the challenge the client had?
No, not at all. Makes sense.
And Gary, for folks who don't know who you are, would you make a quick introduction for yourself?
Oh, yeah, thank you. Gary Massa. I'm here in North County, San Diego. real estate. I run a small real estate team here as well, but also do investments into multifamily syndications, as well as help people invest and retire down in Cabo San Lucas. So I'm also licensed in Mexico. I'm a resident there, own property as well, and work for a brokerage down there as well. So kind of a lot of different investment things. And again, from the multifamily side, I see that. I haven't really been involved specifically on what to do with those cap gains, because that's what our general partner does, our managing partner does. But we're having those conversations even yesterday with clients that have made almost $1 million in the sale of their home in 5 years or 1 year, even here today. So this is becoming much more relevant. My conversation with Brett over the last couple of weeks is becoming much more relevant in conversations with a lot of my clients. So anyways, that's who I am. Thank you.
Perfect. Thanks, Gary, for chiming in, and thanks for sharing a little bit about your background. And then that is a big deal, right? When they sell the primary homes, and that's where Rebecca and Pierce, they specialize. Pierce in the Newport Beach area, and then Rebecca in kind of Lake Tahoe, Truckee area, right? And mostly luxury properties. And so when they go to sell, they feel trapped into the deferred sales trust does defer the tax on primary homes, which is amazing, right? Versus the 1031 exchange, which does not. And so it can help you get listings if you're listening to this as a real estate broker or as a professional, especially for the higher end listings, bigger deals, right? But today's topic is the multifamily syndication deal, and then we're diving to the crypto and what's going on there. So that's it. That's the deal. I invited David to come on. He might come on next week, by the way, a little sneak peek. He might come on and share this deal story and talk about more deals that he's doing. And so one of the questions he had was, well, Brett, I have another property that I'm selling that I had previously used the deferred sales trust money to invest in alongside my personal money. He's like, can I double dip and also use the deferred sales trust for my personal money, even though I have my deferred sales trust money invested in it? And the answer is yes. I said, in fact, you can roll in your personal gains along with your equity there. And it's just DST number, it's just the same DST, but it's note number 2. In fact, he has multiple notes now. He has one for his Phoenix deal, one for his Vegas deal, one for his Salt Lake City deal. And then the next deal he would do, it'd be 4 notes. So every deal is one trust, multiple promissory notes paying back at different times based upon the time that he did the deal. So that was a question that he had, and he'll go on hopefully next couple of weeks and explain what he's trying to accomplish there and share more of the deal story. So that being said, Jake, any thoughts on any of that?
So before we jump into crypto, I have been getting a lot of questions this week about the DST and the DST. Not to confuse the two, but the Deferred Sales Trust and the Delaware Statutory Trust Fund, right? Mm-hmm. When do we combine them together, et cetera? What do we do with highly appreciated assets that also have a corresponding debt that is somewhat significant? Or there was an equipment rental company, very massive equipment rental company that had fully depreciated all of their assets, that was going to be for sale and then have all that callback depreciation. So Brett, if you don't mind just spending 2 more minutes talking about those 2 scenarios and how the DST works hand in hand with other strategies that make that happen.
Yeah. So the first thing to clarify is what problem you have, right? So there's capital gains tax and there's depreciation recapture. And then when you start to do the x-ray on the depreciation, you got to ask yourself, what type of depreciation did you take? Typically it's 1245 or 1250. And then once you decide for that, was it accelerated? Was it straight line? And so the deferred sales trust can defer capital gains tax and depreciation recapture to the extent that it's not certain depreciation recapture. Like, for example, equipment, we can't defer that, right? So like you're taking Section 179 or you're selling equipment, the deferred sales trust wouldn't be something. Now, if it was goodwill, if there's somehow we could structure the business sale where it was heavier on goodwill and less on the equipment, which oftentimes you can, right? If you get early enough with the buyer and negotiate, you say, hey, look, these percentages, it has to be commercially reasonable. We don't necessarily want to do 99% goodwill and 1% equipment when it's not really that, but there might be some ways to make that reasonable. Speak with your CPA, your tax professional on the structuring of that deal. But that being said, the more we can get to goodwill, the more we can defer. Okay. Second, on a traditional property, We also don't want to have what's called a mortgage over basis or debt over basis. That can often happen because people do what's called accelerated depreciation, or they depreciate a long time and then they refinance at a certain point, and all of a sudden they find that their mortgage is above their basis. So upon sale, if you didn't have a potential Delaware statutory trust lined up, you would be paying capital gains tax. The deferred sales trust is not going to defer debt over basis. Why? Well, the government says you've already received the money. In fact, you did a cash out refi and you're really happy because you had no tax, right?
They,
You're like, oh,
they focus heavily on economic benefit that's already been received. Yes.
exactly. So the government says, yeah, it's great. Great that you received this and we give you tax free before, but now we're going to recapture that because you've already received it and you've spent it, right? So it makes sense, right? So how do you solve for that? Well, so now we got to get this a Rubik's Cube. We got to line up, right? All the sides, you have the yellow side, the blue side, the red side. You have the depreciation recapture. You have the mortgage over basis. You have the capital gains tax. You have these certain requirements, and you use what's called the 1031 exchange. Delaware is a better way to put it, because it's just another form of a 1031. But in this scenario, it's really beautiful. Now, remember, it only works for investment property. But what we would do is we would take a portion of the equity and we would use that to purchase a partial 1031 Delaware to the extent that we need debt replacement over the basis. So let's give an example. You had zero basis and you had a $5 million property and you had a $1 million mortgage. Okay. So we got to replace that $1 million mortgage over the basis. Okay. So the first step is we move all of the equity, which would be 4 million in this scenario, to a qualified intermediary. That's step one. Step two, we need to replace that million over basis. So we typically work with 1031 Delaware companies that have very large loan to value deals, typically around 80 to 85.
So they have the capacity to take what we need them to take.
Exactly. They have the capacity. The debt's in their name. It's non-recourse, typically very big, reputable, like Amazon tenants, these big industrial properties that are already closed, ready to go. And so we need to do is put enough of a down payment to get that $1 million of debt. And so on $1 million at 86%, let me do the numbers real fast. That's about a 14% down payment, right? So we would put about $140,000 of that 4 million that went into the 1031, and that would replace our debt. So we did a partial Delaware statutory trust to replace our mortgage over debt. Okay. So that $1 million is replaced. Perfect. That box is checked off. We're not going to get hit with what's called ordinary income tax. And then the rest of the money, let's just call it, to be simple, 3.8 million that's remaining can go into the deferred sales trust. And so that's a lot there to digest, but realize it's just really kind of two separate transactions: partial Delaware, 1031, and then the rest of it deferred sales trust. But we got to make sure we do everything in order. So Jake, does that make sense, or did your brain explode?
So no, that's actually what I wanted you to throw out to the public, because at the end of the day, this comes back to my comment about collaboration. Everybody's situation, it's rarely the same as somebody else. It might be similar in nature, but everybody's situation is going to be different. We collaborate very, very well to help provide the best possible outcome and solution for our clients. Some people's situation is messier than others, but that doesn't mean that there can't be a good, solid solution so that the outcome is still pleasant. And this is a prime example of how we combined a 1031 exchange into a Delaware statutory trust fund in conjunction with the deferred sales trust. And they still have the gross proceeds inside of that deferred sales trust to reinvest in new assets. And so that's the exciting piece at the end of the day. They were looking at possibly having to lose everything if they were to sell, or lose the majority of it. And they didn't have to, because there was a better alternative.
Yeah. And let me also just preface, make sure this is crystal clear. Remember, the 1031 Delaware only works for investment property. So if you're selling a business or a primary home, oh shoot, we cannot use this. And that they kind of come as an Achilles heel. So then what is your option? Well, in fact, I have a deal that's live right now. It's a dental practice sale, and they had about $250,000 of debt. The business is selling for about $3 million. And I said, well, can you write a check to pay off the debt before close of escrow? They said they could. They're like, well, we were planning on just selling the business and then just paying out the proceeds from there. I said, no. Don't do it in that order. Just if you have the ability to write down to pay off the debt right now, if you need to refinance your house, if you need to go refinance a property, or you need to just cash out even of your retirement account, because they were looking at about 35 to 40%. So we did the math for them. They're like, wow, so I can go borrow at 3% on my house, pay off this $250,000 to get a credit line or whatever, right, on your house, however you want to do it, to save 40% on that amount of money. I'm like, yes. So like, okay, we'll do it. Right. So that's also important. So the earlier you can get with us, the more we can add value to you and help you structure the deal properly. So that's exactly what they're going to do. They're going to pay off the debt prior to the close of escrow, because they cannot do a 1031 with their business sale. That's going to make their basis and their debt equal, right? Zero. Therefore, they can sell and all of the funds can be put into the deferred sales trust. That being said, let's move to the crypto realm. And let's a third part of this mastermind, which is the cryptocurrency. So one of the biggest challenges with folks who are selling cryptocurrency is they want to be able to diversify. They want to be able to time the real estate market and or even the crypto market. They want to be able to have some liquidity, some cash flow. And so part of this vision is helping our clients who are in cryptocurrency buy investment real estate, all tax deferred, using the deferred sales trust. Also invest with Jake Miller as the financial advisor in a diversified investment grade securities, start a business, whatever the outcome that you want to do. Why is it that you're investing with any type of asset? And what if you could sell high, diversify, and buy back in whenever you'd like to? So this is what we've already done and we're doing. We've already proven it. In fact, there's a story I wanted to read to you guys, and I'm inspired by it because I was telling Rebecca about this book. And it's by a gentleman named Russell Brunson. It's called Expert Secrets. Okay, if you haven't read it and you think you want to level up your consulting and sales and teaching ability, this is, I believe, probably might be the best book I've ever actually read on this. And I'm just going to read this opening part of this chapter here, and this will give us some basis for what we're talking about here. All right, so here we go, okay? It says, for generations, people believed it was impossible to run the mile in under 4 minutes. They believed the human body wasn't capable of going that fast and that it would collapse under the pressure. Some doctors and scientists said it wasn't just hard or dangerous, but physically impossible. No one could run a mile in under 4 minutes. Then, on a cold, rainy day, May 6, 1954, 6 men entered a race held at the Iffley Road Track in Oxford, England. One of these men was Roger Bannister. As he crossed the finish line that day, he did something that was thought to be impossible. Over the loudspeaker, the announcement came, ladies and gentlemen, here's the result of the event. 9 and the 1 mile subject to ratification will be new world record. The time was 3. The announcement was drowned out by the crowd when they realized it was under 4 minutes. Bannister had finished the race in 3 minutes, 59 seconds. He had done what so many people believed was impossible. He broke the 4-minute mile. It says after that record was broken, it was held up for only 46 days before it was broken by John Landy. Once people saw it was possible, it created belief in others that they could do it too. Since that time, more than 1,400 runners have broken the 4-minute mile. So what I love about this story is that for decades, maybe hundreds of years, maybe thousands of years, no one believed that the 4-minute mile could be broken. And then it was broken. And then within 45 days, literally another handful of men broke it, and now 1,400 more people have broken it since 1954. So I believe that is where we're at with this cryptocurrency current marketplace. We closed the first one, $5 million of Bitcoin, Ethereum, a mixture mostly Ethereum. And now we're getting a wave of individuals who are finding us. You might be finding us right now. We have Jake and I have a Bitcoin, strictly Bitcoin, by the way, very strictly Bitcoin engagement that's been signed for which will be a new client of ours. We're looking for numbers, looking for about a $54,000 exit price. But that being said, that will be another multi-million-dollar Bitcoin case, as well as multiple other clients. And we believe in the next 45 days, this has opened up a kind of a floodgate of folks who want to capture these values. And like Roger Bannister, we've broken the impossible, we believe, which is deferring capital gains tax in a way that's very elegant. I'm going to pause there. Jake, what do you think?
You know, not only have we broken the 4-minute mile, but we've done it in such a way that has been proven time and time again. as it's been tested. So not only, so when I was asked to vet various strategies for this association of accounting firms that span the country, over 10,000 firms, oftentimes they would ask me to vet various strategies. And if it was a new strategy, it didn't matter how solid it sounded. If it was a new strategy that hadn't been tested, we wouldn't do it. It was X'd, right? So it has to stand the test of time. So this has been around 25 years. It's wonderful. You know, some of the next tests that we put it to is, well, has it been tested by the IRS? Has it been confronted? I mean, has it always just flown under the radar and at one day it's going to blow up when they find it, or has it been tested? And this has been tested on a number of different times, thousands of trusts, just by the law of large numbers, even if it's like 0.5% or whatever of all the trusts out there that get tested by the IRS or scrutinized, so to speak. This has been tested 14 times, and 14 times, 100% track record. I can't say that enough, because that is such a critical thing. I mean, literally, this is breaking the 4-minute mile in the sense that it works and it is doable and it is repeatable. And now that some people have done it, thousands of people have done it, thousands more will do it.
Very well said. Thank you so much. And that's that wraps up. Or now we talked cryptocurrency. I don't know, Jake, if you want to talk any live cryptocurrency, any particulars or some questions that have come up. I'm trying to think through our last one. What was some of the questions? They wanted to go into a business deal. We kind of talked about that already. They can go into the business deal.
I think I just
about the crypto world that we want to touch on right now.
Yeah, so a little bit general to begin with, and then we get a little more specific. A lot of our clients, they view the crypto world as having cycles. Some of them are investing in a lot of different crypto. A lot of them are investing just in what they know and understand extremely well. Just, you know, just Ethereum, just Bitcoin, just whatever, right? Some of them are seeing it as being cyclical, and so they're going to ride it up. They're going to sell out. They're going to wait till it goes down. They're going to get back in, right? In the interim, we invest those assets so that they're still doing something. We use marketable securities that are, you know, investment grade, and we have a variety of strategies to make sure that from a corporate investment strategy standpoint, they're available for the next opportunity. And I would say by and large, most of them want to diversify beyond what is crypto. They made their money and they want to use some of it to kind of diversify into other assets. So, Brett, we have people investing in real estate with money they earned in crypto. They're doing it through the deferred sales trust. And because they're doing it in the deferred sales trust, they're not having to pay tax on these various transactions as they sell out and reinvest in new assets. So they're getting out of some of the crypto, reinvesting in some other crypto, reinvesting in the stock market, reinvesting in real estate. And some of them go so far as to do joint venture business relationships as a stock owner in somebody else's company, like a direct participant, sometimes a general partner, sometimes just a passive partner. There's different dynamics and different structures that we set up to make that possible for people. So generally speaking, they did their thing, they made their money. Now that things are really good, as a prudent investor, selling out when things are high, or they're timing it, or they're waiting for it to get to that point where they want to sell out. And we're helping them. They had their cash cow, which was the crypto, and we're using their cash cow to build all of these outside assets, or their golden goose, if you want to call it that. Now we're using the eggs to create other assets that they can use and rely on should something ever happen to them or their family or whatever else. They've got this solid base with diversified assets to support them.
Perfect.
You know, and we can dive deep into some crypto, but I want to just point out that a lot of people have different methodology, different ideology when it comes to crypto.
Yep. I think it's really well said. I also had a call yesterday from a gentleman. He has $2 million worth of crypto. He saw us, Jake, on one of these masterminds, watching on YouTube, and he said he had 10 coins that had 70% of the 2 million. You know, represented 70% of the 2 million, and then he had 30% of the coins that represented about, or I'm sorry, 290 coins that represented about 30% of the crypto. So he's like, "Can I sell all of them into the DVST?" It's like, technically you can, right? The question becomes, the amount of paperwork and what that looks like, right? So we are working through making this streamlined in a way, potentially with crypto, to do on a larger scale. That's a question he had that came up, but I'm like, the 10 coins, no problem. That's really simple. And then once we streamline with Kraken and streamline with the accounts, I don't necessarily see a big barrier, just a lot of communication and a lot of trading, which a lot of folks are used to, and we're getting more and more used to as we learn the rhythms and the pace of those who are trading in the crypto world. So anyways, that came up. I thought I'd just bring it up here because it was interesting to see that the majority of his holdings were in 10 different coins, 30% were within a lot of small coins.
Yeah. And that becomes more of a, almost like the crypto market is mirroring the stock market in the similarity that there's a lot of different offerings out there, even though things started with a big wave of Bitcoin, then a big wave of Ethereum, and now there's a lot of small coins out there. And I don't know, I probably said that in such a way that offended somebody, but hopefully, we realize that coins, crypto, asset classes, we try to look at everything from an unbiased perspective. And we're willing to work with other professionals. You are the professional if you're bringing your crypto to the table, and this is the deal. Our strategy with the DST is helping you take what you've worked so hard to achieve and continue to reinvest it going forward without having to pay the taxes right now today as you transition in and out of different assets.
A little bit of a technical question here. Are you guys, when you're doing this in Kraken, are you guys transferring from like the Bitcoin or whatever to like a stable coin, like a USDC or a Tether, or is it going right into fiat?
What a big question, Pierce. So first and foremost, to get it into the deferred sales trust, we have to set up the deferred sales trust Kraken account or Gemini account or wherever it's going to be based and custodianed, right?
Okay.
Then we transfer the coin in kind. In kind is kind of like a stock market way of saying we don't sell it,
Right.
we just move it.
You just move the wallet.
So
right?
if this were my coin, I just move it from my wallet here to my wallet there, right?
Right.
That's the important piece, because then once it's inside, we can invest, we can sell out and invest in the stable coin. We can sell out and invest in a lot of different things. And in fact, under a typical scenario, let me just paint the picture a little bit more. Let's say if I had a whiteboard right here, I would have a big old circle, okay? And I'd have little arrows going into the circle. I'd say your coins are going into the circle. Then we sell out of those coins, and we might buy other crypto. We might buy real estate. We might buy stock market stuff, right? So you're going to have a Charles Schwab investment account, for example, in the name of your trust. You're going to have the Kraken or Gemini or digital wallet in the name of the trust. So relative to selling out and then rediversifying, getting into stablecoin, getting into all these different token sets or what have you, that is more determinant on the investment plan that we establish with the client. So we're moving things over. What do you want to do with the money? What are your objectives?
Yeah.
Okay, well, your objective is like in the next 3 years to reinvest it heavily in crypto. So what do we do with your money for 3 years? All right, so we've got an intermediate plan for this major priority plan, and then maybe that's only with 30% of the money. Maybe you want to take some money out and spend it. Maybe you want to take other money out and do a joint venture, go buy a multifamily piece of real estate. And so the underlying asset
also
classes.
in Cabo too. You can also go to Cabo now, right?
Oh.
Development, right? And we've got that, as long as it's a legitimate business purpose.
Yep.
You can go there and you can invest there, and we actually even love if you're the general partner and you're doing it yourself. In fact, I feel like that's the best place for our clients, especially the entrepreneurial business clients, right, who used to making a lot of wealth, and they're or even crypto clients are like, hey, I made a lot of wealth here. I want to be able to run the deal. And so I call it lendership. By the way, a little point of clarity. So you are lending the funds to the trust. You do not own the trust, because if you own the trust, you'd be selling it to yourself. So a little point of clarity is the trust itself, the deferred sales trust, is set up at the Kraken account, and you're transferring it to that trust that you don't own in exchange for a promise of the trust to pay you back. You became the bank, right? You're loaning those funds. So it's like it's $1 million. That $1 million of Bitcoin transfers over to the new account. You get a promissory note for $1 million. Once it hits that Kraken account, they're going to sell it to USD. Now that new trust has created a new basis, because basically it was transferred to them for $1 million. So basically got it for you from $1 million, sold it for $1 million. So it has no gain. And therefore it's in a tax deferral state. But here's the cool part. So you say, well, Brett, so I'm no longer an owner anymore. Oh, hold on. The next day you can do a joint venture partnership with the trust and become an owner of that LLC that partners with the trust and go buy that next business. And you're like, oh, I'm running it again. Yes, you are. I can go buy some crypto with that. Yes, you're running that again, right? So these are all the little intricacies that we're working out with you, for you, and to help you create and preserve more wealth. And Jake or Pierce, does that answer those questions? There any questions on it? Also, Gary too, he might have a question as well. If you're good, just say I'm good. Just put your thumbs up. But if you have a question, then just chime in.
No, I mean, no question. But I mean, I think the general thing that I'm taking away is that there's just so much opportunity to do different things with it, and I think that's where I first was introduced to you, was when you interviewed with Nick, my broker down in Cabo. And excuse me, I know a lot of people here that would love to be able to reinvest down in, just out of the country, whether it's here, Costa Rica, et cetera. And there just was no way to do that through 1031 exchange or through other, investment means. So that opens up a whole lot of doors, from even just personal investment to doing, big developments down there. Cause we're building like large condo developments, and, the need for investors is bigger than ever. So just opens up a lot of doors. And it's nice to know that it's not just limited to like for like exchange, like a 1031.
You nailed it. And by the way, I met with Ashcroft Capital here in New York yesterday, and we sat down and we talked about raising funds. And their traditional model is getting $25,000, $50,000, $100,000 from 50 individuals, right? And it can be it can be a lot of work to do that. Nothing wrong with that, but that's what they mean, the traditional model. And I told them the cryptocurrency deal. I told them the couple we're working on, Jake, and the ones we've already closed. And the deals we closed, and they're like, this is the Netflix way of raising funds, right? Raising capital by helping people solve their big problem of a lot of wealth that they've accumulated, defer the tax, and then go in partnership with you into the next deal. And so he's like, oh, he goes, because when I talked to you a year and a half ago, I was thinking like, you're going to take these people from it. Like, no. You bring the deal in, you bring the person in, and they have to approve the investments. We have to approve the investments. It's got to be legitimate, right? Let's go through that. That takes some due diligence. But no, this is a great way for you to add value to your investor base, unlock capital that's just sitting on the sidelines with them in crypto or businesses or other primary homes or whatever else. And then the next day, a large percentage can go back in with you on your real estate fund or deal. So that's the whole part. Like once you get that, it turns all the thing. It really makes this thing a 10 out of 10. Without that, the DST is I think like a 1 or 2 out of 10. I mean, unless you're like just super sleepy and you just want to completely just, fall asleep and have someone just do all the stock market stuff, which is cool. There's clients that do 100% stock market stuff as well. But really realizing that the DST you can't put in a box, right? And you got to keep an open mind that these have been done. This can be done. The key is clarifying your vision for your wealth, what you're trying to accomplish, and then working with us to help us and you, all of us together, design and build this customized DST wealth plan so you can achieve what you're trying to achieve. So that being said, we're out of time, guys. I got to jump to this lunch date with my wife here. So I want everyone to invite someone next week. Okay. Gary, bring back someone next week. Bring a potential client, bring whoever, right? Rebecca, bring somebody. Pierce, bring somebody. Jake, bring somebody. And let's try to grow this more and more. Next week, we're also going to cover, we're out of time. We're going to cover some good news on the Biden's proposal that he's taken some things off the table. And so things are looking better for entrepreneur, business, and wealth owners. Better than it was, let's say, in the first proposal. So we'll cover that next week. That being said, you can find all about me at capitalgainstaxsolutions.com. You can search our YouTube channel. You can search iTunes for our podcast. Jake Muller, financial advisor, my business partner. Jake, where can they find you at?
You can find me on our website, which is alphamarktax.com, ALPHAMARK tax.com. We also have an 800 number, 1-800-773-1848. Feel free to reach out anytime. You can book an appointment right there on the website.
Perfect. And if you reach out to Jake or I, either one is fine. Just let us know that you saw us here. Pierce, where can people find you?
Yeah, kingdomluxuryrealty.com. And also my cell phone number is 916-878-0903.
And Pierce is also quickly becoming an expert in all things deferred sales trust. He studied for 5 years. He's on the same real estate team that I'm on, and he's luxury in Newport Beach area. And so look him up. And Rebecca, where can people find you?
You can find me at RebeccaMunston.com or cell phone number 530-448-9740. And that's MONSON.
In
Rebecca,
all
last
things luxury, Tahoe and Truckee. Go ahead.
What was the last four? I have a client who's going to be looking for something in like Incline area.
Okay.
So
That's Nevada. So I'm working on my Nevada license.
yeah.
Yeah.
He's got a $4 million house that he wants to sell, but doesn't really know where to go.
Okay. Well, we can talk. Give me a
So
call.
the last four of your number, sorry, I was writing it down.
448-9740. 530 area code.
Okay, cool.
Sweet. Gary, go.
My website is itsyourmovesandiego.com. And my cell phone number is 760-889-7701.
Awesome.